It was one of those calm Monday mornings when a call from HR shattered the silence. Sir, some of our employees can't file their annual tax returns. The LIRS portal says no record of remittance. At first, it sounded like a system glitch. The company had been diligent. Every month, PAYE was deducted, remitted, and annual returns were filed. Yet, the employees' tax accounts were blank on LIRS e-tax portal. Confused and anxious, the HR officer came to me for help. After a brief review, the problem revealed itself like a hidden clause in a tax law. The payer IDs of several employees had been omitted during PAYE filing. In Lagos State, the payer ID is more than just a number. It is the bridge between an employer's remittance and an employee's tax record. When omitted, the remittance still goes through, but the funds float in the system, unlinked to any employee. It's like sending money to a bank account without writing the account number. The payment exists, but no one can trace it. That was exactly what happened. Months of careful remittances had been made, but since some employees' payer IDs weren't included, their taxes were not reflecting in their individual LIRS e-tax accounts. For the employees, it meant no visible tax credit, no annual filing, and no tax clearance certificate. We rolled up our sleeves. The task was clear, reconcile, and correct. Our first step was to build a reconciliation schedule, a spreadsheet that became the lifeline of the operation. We listed employee names and their correct payer IDs, months and years of PAYE deduction, gross pay and tax paid, payment reference numbers, and copies of receipts and annual return acknowledgments. Each row told a story of an employee who had paid faithfully, but whose record had vanished into a digital void. Then came the letter, carefully crafted, structured, and respectful, addressed to the Executive Chairman, Lagos State Internal Revenue Service. It bore the subject line, Request for Reconciliation and Update of Omitted Employee Payer IDs on PAYE Remittances and Annual Returns. In that letter, we explained the error not as an excuse, but as a fact of human oversight in a digital process. We attached our reconciliation schedule, receipts, and return acknowledgments. The letter ended with a promise. Measures have been put in place to prevent a recurrence. The next step was submission. We delivered both hard and soft copies, one to the PAYE/Personal Income Tax Department at LIRS office, another through the relevant official email. The waiting began. Within 3 weeks, the LIRS PAYE/PIT support desk had reviewed, matched payments to records, and updated the affected employees' accounts. One by one, the employees logged into their e-tax portals, and their tax credits appeared. The missing PAYE was finally home. There was relief and a valuable lesson. Tax administration is not just about payment. It's about accuracy, documentation, and traceability. In this case, the company didn't default. It simply missed the identifiers that make tax data meaningful. Here's what we learned. Always verify every employee's payer ID before filing PAYE annual returns. Maintain a master staff register with all employees' payer IDs. Review every PAYE upload file carefully before submission. Conduct quarterly reconciliation internally if you have frequent staff turnover. As I left the LIRS office that afternoon, I couldn't help but smile. The experience reminded me that in tax practice, the smallest details often hold the biggest consequences. A missing payer ID may seem like a clerical slip, but for the employee whose record it affects, it's the difference between compliance and default. That day, I learned once again that every digit matters in the world of tax. Moral of the story: in taxation, precision is not optional, it's the law. This valuable insight comes from Olatunji Abdulrazak CNA, ACTI, ACIARB, founder/CEO, Tax Mobile, online.